No, I like that. That's so smart because I tell, renters when you're paying rent, you're basically flushing that money down the toilet. But if you're paying on your mortgage, then you're not flushing that money down the toilet. It's actually being put to use and stuff. Welcome to Real Hits of Real Estate, where Southwest Florida's real estate market meets local flavor. If you love real estate, local discoveries, and learning how to make smart moves while living the Southwest Florida lifestyle, you're in the right place. Hi there, and welcome back to Real Hits of Real Estate. I'm your host, Heather Hitz, and I'm so excited about today's guest. Before we get started, let me introduce Mike Steele. Mike is a mortgage broker with Edge Home Finance LLC, and he brings over 30 years of experience to the table. Here's the fun part. Before mortgages, he was actually with Ritz-Carlton and trained at the Culinary Institute of America. These days, he specializes in helping clients navigate the home financing world right here in Southwest Florida. Financing can feel so overwhelming for buyers, so I can't wait to have him break it all down for us. Welcome to the show, Mike.
Thank you very much for having me. I appreciate it.
Yeah. So I want to get started with your journey, and I have to start here because it's such a cool background. You went from high-end culinary arts at Ritz-Carlton to 30 years in the mortgage world. How did that career pivot happen?
It's kind of a long story, but yeah, I worked at the Ritz-Carlton in Naples. I ended up moving away from Southwest Florida close to 40 years ago.
Wow.
I had, from the Ritz-Carlton, I got a job in Christian food service.
Okay.
They moved me to the Midwest.
Okay.
And I ended up staying in the Midwest for a while, really until my sons graduated from high school. But
Okay.
while I was out there, I was introduced to the mortgage industry. And I knew that being a chef for a long period of time isn't something physically I could do, standing in the kitchen. So I kind of fell into the business. And back when I started in the mortgage industry, there was no licensing. Anybody could be a mortgage broker. So it was really easy to get in. And then after I was in the industry for a while, I think it was 3 years, and then the licensing started to come into effect, and I had to be licensed at that point.
Gotcha. Wow.
Yeah,
That's so interesting.
It gave me an opportunity to be a stay-at-home dad to my sons, because in the food service industry, you're working 50 to 100 hours a week, which I was doing.
Right.
As a parent, I was able to stay home with my kids and still earn a living.
That's awesome.
And then about 15 years ago, I moved back to Southwest Florida after my sons graduated from high school. And this is where I loved before, and I still love it down here.
Nice. That's awesome. So after working in the Southwest Florida market for so long, how has that shaped the way you see our local housing trends?
I've seen, I got here, close after the crash. So there was still a lot of foreclosures. Obviously, house prices were much lower than what they are now. So now I've seen it more. It was pretty easy to qualify for a home loan because homes were much less expensive. I mean, we have to say that.
Yeah.
So, I'm counseling people more on the total cost of home ownership because it is more expensive. Interest rates are higher than, what they were 5 years ago. So I see myself doing a lot more counseling with people so they understand that it's, not just the mortgage, it's everything else that goes along.
Right. Exactly. Yeah. I mean, there's more than just there's your monthly payment, but in the mortgage payment includes insurance, and we'll go all more in detail on that. I know we will. So, first, talking about renting versus owning, this is something I talk about with my buyers all the time. Why is it so important for renters to realize that a mortgage is always getting paid, whether it's from their landlord or for themselves?
So this is the thing. You have to live somewhere.
Right.
So no matter what, you truly are paying a mortgage payment, whether you're renting or you're going to buy. It's a matter of can you afford that payment.
Mm-hmm.
If you're renting, you still are paying taxes. You're still paying insurance. You're still paying upkeep. That's all in your rent payment.
Right.
Otherwise, the landlords wouldn't be making any money. When you own a home, you are paying a mortgage, so you're paying taxes and insurance, but you're also building a forced savings account. And what
Mm.
I mean by that is your mortgage payment is going to include principal and interest. So every
Mm-hmm.
month you are paying down on that principal balance of your loan.
Mm.
So, the longer you're in your home, the more equity you build in your
Right.
home. If you're renting, you never build that equity. Um,
Right.
and no matter what, if you're renting, you still have expenses. You still have renter's insurance. Um,
Mm-hmm.
I've seen lease agreements now where the renter is responsible for all the major appliances.
Wow.
Um,
That's crazy.
yeah, so it's when you start to get into having to replace a refrigerator or oven or something like that in a house that you rent, you might as well be buying and start building that equity over time.
Exactly. It should be your own home then. No, I like that. That's so smart because I tell renters when you're paying rent, you're basically flushing that money down the toilet. But if you're paying on your mortgage, then you're not flushing the money down the toilet. It's actually being put to use and stuff. So no, I love that, the
Yeah,
forced
and
savings
it's
account.
making sure that you can make that monthly payment.
Right.
Because I always tell borrowers, if you're renting for $2,000 a month and you
Mm-hmm.
want to move into your dream home or it's your first home, and the mortgage payment is going to be $3,000 a month, if you
Mm-hmm.
can't save that extra $1,000 a month comfortably right now, you can't
Mm-hmm.
afford the home.
Right. Right.
So
Yeah,
you've got to make sure that you can afford that payment.
yeah. Yeah, let's talk about monthly payments. So why is it smarter for buyers to shop for a home based on the monthly payment rather than just the overall price?
Mostly because you operate off of what a payment is going to be. And depending on the home that you're looking at, you may have HOA dues on that
Mm-hmm.
home that is included. That's going to be part of your monthly cost over just what the purchase price is. You'll also find, depending on the home, especially here in Southwest Florida, um, you know, your insurance is going to be different depending on the age of the home. Um,
Mm-hmm.
Taxes could be different depending on, you know, the age of the home, where it's located. If the person prior to you purchasing the home has been in the home for a while and they've gotten that homestead exemption.
Mm-hmm. Mm-hmm.
So all of those things will affect it, but you live off of a monthly payment. You don't live off of what the purchase price is going to be.
Right, right. No, that's totally true. Um, how should buyers start budgeting for things like insurance, taxes, and maintenance as they tend to go up year after year, especially now?
Yeah, that's kind of hard. Thankfully, we've had more insurance companies coming into the state of Florida,
Mm-hmm.
so that has helped reduce or at least maintain insurance costs. Um,
Right.
is something that every buyer needs to have on speed dial when they're looking at a home, so they can
Mm-hmm.
call their insurance agent and say, "Hey, I'm looking at such and such home. What are the insurance costs going to be?" As far as maintenance goes, probably the average is thinking of setting aside 1% of what that purchase price is just towards maintenance. So when
Mm,
you're setting up a budget, that's what you need to be setting up every single month so you have money to do those fix ups when they come up and it doesn't strain your budget.
yeah, that's a good idea. Kind of like a rainy day emergency fund.
And, taxes in Florida, obviously, that's been a big, big issue this year. Um,
Right.
it could change in November for all of
Yep.
us. I did videos over a year ago about raising the homestead exemption.
Wow.
I'm glad that
Yeah.
our state legislature is starting to look at that. I think that is a great idea um,
Yeah.
to help homeowners, especially owner occupied homes. Um,
Right.
but you can't plan on that. You can't
No, you
guarantee
can't.
that that is going to happen. Um,
Right.
and there may be, even if it does pass as a law, it may be that we have to change some other things in our tax code to make up for that. So you always have to be looking, uh, what the cost could be, and you don't want to stretch yourself too thin.
Exactly. Yeah, no, that's smart. Yeah, I just had on my podcast Matt Caldwell talking about that homestead exemption and everything. So we'll see what happens in November. Um, yeah, you just never know, right?
Yeah.
But yeah, I mean, the homestead exemption, I mean, it's been 50,000 since I looked it up since 2006. That's 20 years ago. So
Yeah.
I think it's
Home
definitely
prices are
time,
so different.
right? Yeah. What a huge difference. Um, why do you think a primary residence should be looked at first as a home rather than strictly as an investment?
I'm I'm pretty outspoken in this, and your primary home is not an
Hmm.
investment. It
Hmm.
may be one day if you ever sell that home, but I always tell people look at your primary home as a place to live,
Right.
and making sure again that you can make that monthly payment. But an investment, you're actually getting income off of.
Right.
Your home, you're not getting income off of unless you buy a duplex as your first home,
Right.
and then
Hmm.
you do have that investment income. But on your primary residence, you are not getting income. So truly, it's not an investment until you sell that home.
Correct. Yeah. Yeah. I know when talking to buyers and stuff like that, I just like, well, what's your main purpose when you're looking at buying real estate? Is this a primary residence? Is this a vacation home? Are you planning on renting it? It's first understanding like what your main goal is for that property. That changes a lot of things, I think.
Right.
So,
I mean, it's always going to be an asset.
right.
Just like a paid off car is an asset, but a
Hmm.
paid off car is not an investment. It doesn't bring you any.
Right. No, exactly. So, what are some of the ongoing costs of owning a home that buyers tend to forget about beyond just the purchase price? I know we kind of just mentioned a few, but
Yeah, we
what,
talked about a few, but I do think that people they don't look at costs going up. They don't look at HOA dues.
right?
And I'm not against HOAs. I think they are good. If
Mm-hmm.
you're not living in an HOA, you obviously have outside maintenance on your house,
Right.
whether it's mowing the lawn. I see a lot of people not taking into account uh, that you are going to have maintenance for your lawn. If you have a pool, somebody's got to take care of the pool. Depending on where you purchase and how far that is from your job, you could be spending more in gas and travel just to get to your new house.
Mm,
You may not be considering that prior to buying because you've walked into a house that you've just fallen in love with, and you don't think about all those little things that could happen. How old
right.
is that air conditioner? How old is
Right.
that water heater?
Yep.
Like I told you before, I'm getting a new dishwasher delivered today. How old is that dishwasher? All of those little expenses
Mm-hmm. Mm-hmm.
people don't think about.
Yeah, exactly. No, and sometimes they break faster than you were anticipating or hoping for too. You just never know.
Yeah, and if you're like me, I'm not mechanically inclined whatsoever. I depend on my sons a lot for that type of thing. Um,
Yeah.
so if you have to hire somebody to
Mm-hmm.
replace all those, it can get very
It
expensive.
can get expensive. Yeah, for sure. Yeah. So the broker advantage. You have a saying that all lenders are really just selling money. What does that mean for how a buyer should approach their financing?
So especially if you are getting an FHA loan, a VA loan, a typical conventional loan, we all basically have the exact same guidelines.
Mm,
But every lender may have overlays to those guidelines. And what I mean by that is like some lenders on a VA loan, they want to have a minimum of a 620 credit score. FHA loans, sometimes they'll go down to 580. As a
mm,
broker, I work with multiple lenders. We have over 100 lenders that we could work with. And
mm.
some of those lenders don't have any kind of overlays. fees. So they may take a VA loan that has a credit score of 500.
Mm,
But ultimately, when you're looking at your loan, if it's the basic loans, a FHA, VA, conventional loan guidelines are the same. So the big
mm-hmm,
difference is the interest rate.
mm,
And the
right.
interest rate, if you're working with a lot of the big box lenders or even a bank, they're not shopping that interest rate for you. To where I'm shopping that interest rate from top wholesale lenders. And
Mm,
we have lenders all the time that say, hey, this month we're running specials on VA loans. We're running specials on FHA loans. So my job is to take that borrower and their qualifications and match them with the best lender. That
mm,
doesn't always mean the lowest rate, but what it means is getting the best rate that I can and also with the best lender that I can.
mm. So how does that actually save buyers money compared to just going to a, a lender or bank?
So straight off the top, I mean, working with me as a mortgage broker, I don't charge any lender fees. So right off the top, you'll see on a loan estimate or the closing cost, typically lenders will have anywhere between $1,500 and $1,900 just in like underwriting fees or processing fees. I just don't
Gotcha.
charge those.
Nice.
And then a lot of times, I'll have a lower interest rate because, again, I can shop that rate from
Mm-hmm,
multiple lenders. When I find with my lenders, I have some of them, that they specialize in doing everything fast. They don't
mm-hmm,
necessarily have the best rates, but if you have to get a loan closed super fast,
mm,
they're the lender to go to. I have other lenders, that have exceptional rates, but they're upfront. They're not necessarily the fastest lender out
mm.
there. So, it's as a mortgage broker, you want to make that perfect match with lender and borrower.
Nice. Interesting. Very cool. Yeah, because you could always refinance down the road. So I guess it all kind of depends on what your situation is at that
Correct.
moment.
I mean, and rates change throughout the
Mm,
day. I mean,
right.
mortgage rates can change 3 to 4 or 5 times a day depending on what the market is doing. Uh,
Right.
so even if you call me at 9 o'clock in the morning, I can tell you what the rate is. It could be different by noon.
Right. Yeah.
Um, but for me, I'm saving people in closing costs and then in interest rate. By the national averages, using a mortgage broker, you can
Mm-hmm.
save like $10,000 over the life of the loan on average.
Wow. Interesting. Very cool. So a lot of buyers hear VA, FHA, and conventional and feel totally lost. Can you explain how those loans work and who they might be a good fit for?
Sure. Yeah. A VA loan, obviously, if you are a veteran,
Mm-hmm.
that is by far the best loan that is out there. There are a lot of misconceptions with veterans thinking that they can only use that benefit one time, or maybe, they may have a current VA loan and they don't think they can get another VA loan. And you actually can if you have enough entitlement. So
Mm,
I've had I've had 3 borrowers in the last 3 months. They all had VA loans and they got a second VA loan
oh,
uh,
interesting.
to purchase a new home. FHA loans, the misconception there is that they are only for first time home buyers, and that's not true. The majority of the time, you can only have one FHA loan at a time, though there are exceptions to that rule. But I have borrowers that they could have a high debt ratio. They could have past credit problems that they haven't worked through yet. And because the FHA loan has a lower down payment and a fixed mortgage insurance cost, sometimes that the FHA loan is far better than a conventional loan.
Mm,
Conventional loans are great if you have excellent credit, especially if you have an excellent down payment. Because the mortgage insurance on a conventional loan is based off of the number of buyers that are on the loan, your credit score, the loan to value, the mortgage insurance on a conventional loan can be much different
mm,
than on an FHA loan. Um, So it's, matching those up. But a conventional loan, those are typically, some first time home buyers because they have a 3% down first time home buyer product.
Hmm.
And there are a lot for move up buyers, people who do have excellent credit or large down payments. But you can also have somebody who's got some spotty credit, maybe in the 600s or lower, but they have a substantial down payment, and we can
Hmm.
still get them approved as a conventional loan.
Nice, nice.
The biggest
And
difference
if you're
is making sure that you're being put in the best loan for you.
right, right. And if you're able to put 20% down, then that gets you out of the PMI, correct?
Correct. There are options where you can put less money down and still get out of mortgage insurance on conventional loans. But also, mortgage insurance isn't taboo. Um, People get scared because they're having mortgage insurance and they think it's such a bad thing. But depending on the down payment, you may be better off putting 15% down and paying a little mortgage insurance for a few
Mm,
years and then having that money. A lot, too many borrowers, I would say, not just a lot, but too many borrowers are putting everything they have as a down payment because they're scared of mortgage insurance.
oh,
Then they purchase a home, they get into that home, and they need new towels, shower curtains.
mm,
Um, they may need some furniture, and they end up not having money for that. So they instantly put
right,
it on a credit card. And
right,
that's
right,
worse than paying
right.
mortgage insurance.
Yeah. Or they might need like a water heater
Yeah, or yeah,
or
or they,
dishwasher.
yeah, or they put all their money down and they don't have any kind of money to fall back on should
Right.
something go wrong.
Yeah. No, that's smart. So, what's the real difference between working with an independent mortgage broker versus a big retail bank? I think we kind of really touched on that, but
We did. I think the biggest thing is the cost savings.
hmm.
Back in the 90s, when I started in this industry, I was a mortgage broker and I enjoyed that. But after the crash, a lot of regulations changed and it really hit the mortgage brokers the most.
Oh, okay.
And it was more difficult for them to be competitive. And the wholesale lenders really had, just had processing issues and underwriting issues trying to get things closed fast. And the reason I went back to being a mortgage broker is all of that has changed.
Mm,
With technology, you can get a loan closed just as fast, if not faster, with a mortgage broker than
mm,
you can with the retail lenders, and you have more options. You know,
right, right.
and for instance, I had an FHA loan that it was a tough FHA loan. I had four of the top wholesale lenders in the United States turn it down. And as
Wow.
much as I felt I am right on this, there is a reason, we can explain it. I found a lender that would take it, and we were able to close um, on a loan for a borrower that had been getting turned down. And even though I could kind of understand where they were coming from, I'm like, but that's not what the guidelines say. And if
Mm,
we follow the guidelines, we should approve this borrower.
nice, nice. And I'm sure that buyer was very happy.
Yes, he was very happy.
That's awesome. So getting ready for um, if a buyer obviously is starting their home search, what financial documents should they have organized and ready to go?
The easiest thing is 2 months worth of bank statements, 30 days worth of paycheck stubs, um, their driver's license, and a couple of months worth of bank statements, depending on where that down payment and closing costs are coming from. But those are typically the minimum documents that you need. Uh,
Mm-hmm.
no matter what, a borrower, if they are starting to look at a home, they
Mm-hmm.
need to be providing documents to their loan officer. If they are getting pre approved just based off of what their credit is, and the loan officer isn't looking at um, paycheck stubs, W 2s, if they're self employed, if they're not looking at tax returns, they are cheating themselves
Mm,
out of, out of having a responsible pre-approval letter. I have a borrower flying down from New York today. They wanted to get a pre-approval letter and they're self-employed. And I said, I have to see your taxes first because
yeah,
I put my name on something that I haven't seen your taxes. If you're self-employed,
right,
that's that can open up all can of worms because typically a self-employed borrower doesn't truly know what they make.
right. Yeah. And that's a tricky one too. And you hear there's two little different words that float around. You get the pre-approval, and then there's also pre-qualification. And obviously, we always want a pre-approval. But what's the difference? And can you tell me? What's
They, I mean, to a lot of extent, they are virtually interchangeable anymore. Um,
oh, interesting.
a lot of lenders, or some, especially the big box lenders, will, send a loan to an underwriter to have them underwrite the income documents. A lot of lenders, if I have a questionable loan and I want a second set of eyes on it, I will send it to the lender to say, hey, can you take a look at this? I'm not totally sure on the income, or there's something
Hmm.
kind of weird on the tax returns, and I'll have them take a look at it. Um, but a lot of times, what that is making sure that the loan officer or somebody has looked at documents.
Ah,
I have so many people that will say they make, $3,000 a month. And then I get a paycheck stub and I can pre approve them if they're saying they're $3,000 a month. Then I get a paycheck stub and $1,000 of that is a bonus or overtime. And they've only been at their job for 3 months. And then I have to say, hey, you haven't had that bonus or overtime long enough for us to even include that
right.
as income. So that's where pre-qualification and pre-approval, that's the biggest difference. And
Okay.
there's nuances to that. I've seen some lenders out there, touting that, if their pre-approval isn't correct, we'll give you $30,000 at closing. Um, One of the lenders I worked with has that. And I'm like, that's obviously a
Interesting.
sales ploy. They're not going
Right.
to lose money. They are going to find a way, if there is a
Yeah.
mistake made, to get
So
out of it.
with the pre-approval, are you verifying all the funds that's needed, their income and all of that?
Yes. Yeah, and it's being run, typically on those, it's being run through the automated underwriting system with either Fannie Mae or Freddie Mac or, FHA and, things like that. So, all of this system, it's being run through all of those systems.
Nice.
And even on, the specialty loans like bank statement loans, that's a matter of collecting those bank statements up front, and those typically an underwriter is going to look at before, because every lender is a little bit different on what they
Hmm.
use on bank statement loans.
And how does getting prepared early, things like income verification and insurance quotes, help avoid those last minute headaches at closing?
Well, I mean, like we've talked about, making sure your income is truly your income. That can be the biggest issue. The other thing is cost. Like when any lender pre-approves you, we are estimating taxes and insurance. I have seen too many borrowers that, even though, everybody tells them you need to talk to an insurance agent, you need to talk to an insurance agent, they wait until, the last minute. And then they find out that I I estimated $2,000 a year for insurance. And on that particular home, and because of any situations they may have, their insurance comes in at $3,500 a year, and that
Wow.
can
Yeah.
be a big difference. Um,
Right.
the other thing, when people are out there getting pre-approved, you need to make sure what that monthly payment is that you've been pre-approved on, because again, the loan officers may be pre-approving you for principal, interest, taxes, and insurance.
Mm,
You decided to go buy a home in an HOA,
right.
and they don't know what those costs are.
Right, right. Yeah, it could definitely totally change the whole picture for sure. Um, so because we're in Southwest Florida, and this is always fun to ask, what is your favorite local gem?
As far as
Anything.
I,
Restaurants, favorite place to go, favorite
well,
beach.
for me, probably the Edison Port Estates in Southwest Florida.
Okay.
I love going up there.
Okay.
There are times that I go up there every month,
Wow.
just to see. I mean, I like Southwest Florida. I like going to the Everglades on the weekends, driving around
Nice.
at night, and seeing the wildlife. I like going to the beaches. I have a paddleboard in my garage. I
Oh, nice.
enjoy going paddleboarding, though I haven't done that as much.
Where do you usually go? What's your favorite place to go?
I live in Cape Coral, so the easiest place for me has always been to go to Matlacha.
Okay. Yeah.
But I mean,
No,
honestly,
it's neat.
I virtually have been everywhere. Um,
Nice.
I've paddleboarded from the yacht club at in Cape Coral all the way down to Fort Myers Beach,
Whoa.
which
That's far.
took me all day, but I wanted to see if I could do it.
Right. Yeah. Well,
I mean, ultimately, there is nothing. Maybe I don't like the traffic in Southwest Florida, but I like everything else. I
we
mean,
do.
not only that, but depending
Yeah.
on restaurants. There's virtually any kind of restaurant that you can imagine that you can go to.
Yeah. Yeah. Definitely. There's gotten a lot more really good stuff. Yeah.
But I like the outdoor lifestyle that you can have in Southwest Florida.
Yeah. Me too. When it's not so hot.
I'll take the hot over cold weather
That is very true.
any
I
day.
second to that. I'm from the Midwest. So now where were you in the Midwest?
In Kansas.
Oh, okay. Okay. That's
And I was
Midwest
there
for sure.
20 years. And
Wow.
the winters were miserable for me. I mean, it was just cold and gloomy, and
No,
because I
thank you.
was raised in North Florida,
Right.
I never really got used to that cold weather.
Yeah. Yeah. That would definitely be hard. I'm obviously originally from Michigan, and I hated, yeah. As a kid, it wasn't so bad, but I was just done with it. Nope, no, not going back. Hate those winters and the gray for like 9 months out of the year. No, thank you.
Yeah,
I'll take my sunny
if it's
sunshine.
and here, if it's gray for 2 days, everybody's like, "Where's the sun? Where's the sun?"
Right? We all kind of like what's happening? It's doomsday or something, if it's gray for that long. But
Yeah,
yeah,
I always tell people, during the heat of the summer, it's hot everywhere. But
it's true.
here, typically, you're at a pool or you're at the beach.
That's true.
So I just don't really
Yeah.
think about it.
Wonderful. Awesome. Well, Mike, thank you so much. Definitely learned a lot, and it's been a pleasure to have on my podcast, and I appreciate you taking the time.
Thank you. I appreciate you having me.
All right. Until next time, okay?
Okay, thanks.
That's a wrap on today's episode of Real Hits of Real Estate. Be sure to like, subscribe, and follow so you never miss a beat. Join the conversation on social media and let me know what topics you love covered. Stay tuned for more expert advice and local finds coming your way. I'm Heather Hitz with RE/MAX Realty Group, and whether you're buying, selling, or simply planning your next chapter, I'm here to help you make your next move your best move. Until then, make it a Hitz experience.